Welcome back to another video here. It's Luke with The Common Investor. This is the first video with my face there in the corner. Kind of figured out how to do that. So today's video, I just want to go through what I have going on in my portfolio and what my investing strategy is. I know a few of you are asking about that, so I figure I'd make a quick video. So jumping right in my portfolio, I have three different sectors of what I'm going for and what I'm investing in. So the first little bit are dividend stocks from blue chip companies. The second are growth stocks from more blue chip companies and higher market cap companies. And then the last are my swing trades, which I'll go in a little bit more in depth about that, since that's where a lot of my gains are coming from. So starting off with my blue chip dividend payers, we have Procter & Gamble, ADP, and Waste Management. You could say Microsoft can be bundled in that. I'm going to personally bundle that in with growth because they've been doing so well lately. Reason for the blue chip dividend payers is kind of to balance the portfolio out. If a market downturn were to occur, we're not going to take as big of a hit as I normally would if I was holding all growth or trading stocks. So Procter & Gamble, ADP, and Waste Management are those three in that sector of the portfolio. In the next sector of the portfolio is Microsoft, PayPal, and Square. Those are more of my growth for longer term plays. Like I said, Microsoft does have a good dividend, but it is still growing. It's a tech stock. Then we have PayPal and Square. Little quick thing about Square. Square's been doing really well lately. Originally, I was just going to use it as a trader. However, I purchased this about a year ago at $46, and I don't know why the chart's not working there. So I'll kind of just explain it. Oh, there we go. So it ran all the way up to about $100 a share. Should have taken my profits then. However, I held, and it definitely pulled back a lot down to $50. However, it's rebounding now to 75, so back up to that $100 level. I'm going to hold Square for the longer term, no matter what it does here in the short term, just because I believe in them for the long haul. They're doing a lot of things right for small businesses. So getting back to the last part of the portfolio is the trading strategy I have. I hold about 4 stocks that are currently in use solely for trading. So what I look for for a trading stock is a stock that has a good name. They've been doing well, however, they've been hit hard lately due to whatever circumstance. So the first one I'll show you is Activision Blizzard. They actually just got hit pretty significantly in the last few months. Reason being is it's for the Fortnite effect. A lot of people are nervous and think that Fortnite is going to take a lot of market share away from the gaming stocks like Activision Blizzard and EA and stuff like that. However, I think it's kind of just a quick glitch and definitely an overreaction to Fortnite. I know Fortnite's really big right now. However, Activision Blizzard has Call of Duty, and then they have Candy Crush with their Kings partnership. So I think over the long term, they're going to pop right back up. This is kind of just a short-term glitch in the road for them. So I bought them about 43 a share at 41. I'm going to be holding strong here for the next few months. Real quick, for what I look for in returns, I'm going for like a 20 to 25, so anywhere from 20 to 30% returns in these traders, and then I'll sell it off and then look for my next victim per se. So next stock we have here in the trading is Facebook. Now, if you've been in the stock market for the past few months, you'll know Facebook has been a really big. It's been doing really poorly lately, mainly because of the Cambridge Analytica scandal and all of the data breaches for users' data. However, that's kind of how Facebook has been making its money for a while now, and it's nothing new to people that have been using it. So this is completely an overreaction, and I'm really glad I got in when I did. Got in at about $129. It was a screaming buy, and they announced some really great earnings and popped up about 10% one day. So We're at about 161 now, and I'm looking at about a 25% return. I'm going to hold this one until $200. We can see we topped out at about $220 a share, so I think I'll get out at 200 and take a really nice profit off of Facebook. So Facebook, another great company that did poorly for something that they've been known for, and they've been doing for a while. Next trading stock we have is X, so that is United States Steel Corporation. This is more of a speculation play. However, it does go into the strategy that I have done for Activision Blizzard and Facebook. So United States Steel, they've been performing very poorly over the past year, have been tanking big time. However, more so the speculation behind it is if Trump's border wall does get built, he specifically said he's going to use United States Steel to build that. So, whether that's a $1 billion or $5 billion, whatever is agreed upon, that's going to be a huge influx into United States Steel. And as you can see, they are down almost 43% the past year. So picked them up around $20 a share, real close to their bottom, and now they're trading about 24, 27. I'm thinking I'm going to get out somewhere between the $25 to $30 range. I know some money is going to start flowing in there. I think as investors realize that government money is going to be flooding into United States Steel, it's going to pop up big time, and I'll take my profits then. And then last stock here for the trading portfolio is Tencent. So like Activision Blizzard, it's another gaming one. Tencent's got a really big stake in Epic Games, which owns Fortnite, and I see nothing but good things for Fortnite. They've been doing it right, and they keep adding features into the game to make it even more fun to play. And they started kind of a revolution on Twitch. So Tencent, reason I bought them is China has been doing really poorly lately. As you can see over the past year, Tencent's been down. As far as the whole Chinese market, they're down big time. I think Tencent's kind of one of the bigger Chinese stocks, and really good play. Got them at about $38, and we're looking at about 16% return. So I'm just going to hold them for 20 to 25%, kind of like I said before, and then kind of get out then. But other than that, that is really the more detailed breakdown of what I'm doing with my portfolio. Share what your investing tactics are in the comments below, and don't forget to like, comment, and subscribe. Thanks, guys.